Hi guys, welcome back. So, many Chinese stocks got hit hard again today, but not only. There are also a lot of the other medium to small caps taking quite a bit. So I'll share my views on this. In despite of this terrible market sentiment, there are some stocks saving the day. YSG is one of them. I will share my view on this and why I have increased my bet on YSG. And then in the end of the video, I will do some update on our stocks. I see some people cannot take it anymore. And I will also update the talk between President Biden and President Xi briefly, okay? First, let's talk about YSG. On this day, I share my buy on the Discord for YSG at 2.8. After so much falling for the last few months, I've decided to re-enter YSG. After that, we see like slow and steady climb, giving us some hope. And then suddenly yesterday, it gave a 17% drop. Another one that's climbing up with the ladder and coming down with the elevator, right? It was a scary fall. For sure, there was no news about this, no reason for the falling. It was just a big fall with no reason. But I don't like to act on impulse, so I took a whole night to think about YSG, think about the investment, think about the company, and balance out the risk-reward. And then I've decided to increase my bet on YSG in the end. And now I'll explain why. So in terms of the industry of cosmetic, it's actually a very similar situation as the coffee industry, where the growth in the developed countries, the Western country, is pretty slow, varying from 0 to 2%. Compared to China, that can still grow at a double digits. Even though the coronavirus had driven down the growth rates, I think it's still more growth than the average speed in the world. Makeup and coffee are still quite new to China. When the brand Perfect Diary was founded, the ratio of makeup to skincare was around 1 to 9. So it's like 9 out of 10 women use skincare in China, while only 1 out of 10 women use makeup. This compared to 1 to 1 in the West. It means how much room to grow for the makeup industry in China. Especially for the last decades, China's GDP economy had been growing like this, while some of the cultural products, makeup industry only grow like this. So there is a giant gap to be filled for this industry. The demand would keep growing. So that is the industry. And then within the industry right now, most of the market share was taken by foreign brands. All the Chinese domestic brands only take up the smaller part of the market share. So it does seem like the domestic brand would have more room to grow. Before Perfect Diary, all the top sales brands, all of them are foreign brands. And this was changed until Perfect Diary. It only took them 2 years to make #1 spots on Tmall sales for the Singles Day. The thing is, whether the industry is growing or not, there is need for the domestic brands leader. In this field for sure, it cannot be 100% foreign brands. That is another big demand for brands like Perfect Diary. On top of that, the recent trend of patriotism, it's only getting stronger and stronger and would very unlikely to go away. So there is the growth of the industry lying in China. There is the domestic brands demand for this industry. There is the patriotism trend going on. So I think the chance for Perfect Diary to fail is much smaller than the chance for them to stay in the game. If they fail, then it would be harder for many other domestic brands. And that means the winners takes all, and that would be the foreign brands. And I don't think China would allow that to happen. That is the macro analysis. And now let's talk about the company. Ever since they were founded back in 2017, it just grew so fast that the market cap just kept on doubling. Especially last year, it received more investment before the IPO. They were already worth 4 billion, 20x in 3 years. And then the IPO just gave them a shot to the sky to push the market cap up to 10 billion plus. Earlier this year, it was more than that. And then what happened after that? The sentiment of Chinese stocks in general, the co-founder leaving the company, the slower growth, and the top 1 position got taken backed by the foreign brands, the lack of R&D expense resulting in the less core strength of the products, and too much expense on the marketing, too much cash burning, and so on, making their share price dropping 90% from the peak. So now the market cap is 1.8 billion. So if you just look at the chart, it looks super scary, like a very bad penny stock. But if you factor in the time before the IPO, this fall actually makes sense because it had grown too fast, too much over the past 2-3 years. So if this is the stock chart, then it could very much look like a bull flag, right? It had 20x and then had a pullback after that because it had grown too fast. So at the beginning, the top priority was mainly growth that results in the revenue. And then after that, what comes after is the problems starting to appear, like the products and the marketing expense, the net loss. And because more and more competitors start to see what they're doing, and they can copy the same way that YSG does marketing, which was why they were growing so fast at first. The marketing strategy, which the foreign brands have been adapting recently. That's why they started to catch up. And in this year, 2021, I would say that this is the time the management had to sit down and face the problems that they couldn't pay attention to when things were growing so fast, and started to shift the focus and strategy into more product innovation. This you can see in a series of investment acquisition partnership they have been doing this year. Last year, they have acquired a skincare brand, Galenic, from the French group Pierre Fabre. I don't know how to say the name, but it is a premium French skincare brand established in the late 70s. And a few months later, China's cosmetic startup YSG to buy a 35-year-old skincare brand, Eve Lom. So both of these acquisitions, the brands have a much longer history than Perfect Diary and premium experience. So a lot of people might think, how can a Chinese startup brands that focus on the middle range demographic acquire two high-end European brands with much longer history, right? And also why? So I think a lot of investors are skeptical about this. How can they integrate the brands? What do these help for Perfect Diary? But I gotta say, I feel kind of excited for that because it shows their ambition or the vision to be the L'Oreal of China. And you know what this reminds me? Remember a few weeks ago we talked about Geely, and I shared the history of how Geely acquired Volvo when Geely was just a startup that targets low-end Chinese customer, versus Volvo was a premium brand that's international with a much longer history. The how and the why? Geely was able to acquire Volvo because the growth of the auto industry was much stronger in China. So Geely can help Volvo open up the Chinese market. And also Volvo, with the much longer history and a great team of engineers and designers, can help a lot Geely to improve their R&D, their products, and international expansion. And here, do we see YSG is doing the same thing by acquiring these foreign brands? So then they can offer a shortcut to develop new products with great experience and open up international market. I think it's possible. So in terms of the valuation of the company, these brands that they have acquired would support the brand asset. As of right now, the company is holding 3.6 billion RMB cash. So it's 560 million US dollar, while the net loss had decreased by 43%. So that means the cash burning rate is much smaller. This is a sign of a company improving their operation when they're under the consolidation. At the same time, the company also announced a 100 million share buyback program. So that is more than 5% of the total amount of shares. The company has sufficient cash. They have multiple brands they already acquire. They're reducing the cash burning rate and also announced the buyback program. So it does seem like the share price had fall to a very fair valuation, and the management must be confident for the share price to turn around in the near term. So if not this year, maybe next year. They're confident, they think the share price is undervalued. So it does make me more confident in this investment. So that's why after a big fall yesterday, last night I took a long time to value the risk-reward ratio, and I was leaning towards the opportunity and decided to increase this bet. Which was why this morning I shared the lead call on the Discord. So this strike price is 2.5, expiring in 2024. That means I'll be betting YSG would get above $4 in the year of 2024. I think the chance for the share price to get back above $4 is pretty high. And if it gets to the higher target in 1 to 2 years, then I think I have chance to 5 to 10x my call option. If the company goes bankrupt or it's just lay flat, I lose 100% over the next few years. So I'm risking 100% for a 5 to 10x opportunity. There is no guarantee that it cannot drop down further, but if it does, I think I would feel comfortable to buy more of the dip. Let's say it dropped to 2.2 to 2.3, I will be adding more again. Now let's talk about the market. Now, whenever the S&P 500 and the VIX growing together, it's usually an alert to keep an eye on. But one good thing is that I've said if Russell 2000 backtest 233 again, it's a good opportunity to buy the dip, and we have got there. So you see it's a breakout, make all-time high and backtest. If we confirm the support here, we should see a rebound of the medium to small caps. For example, you can see Teladoc, ticker symbol TDOC. It had quite a big dip today, but it looks like it is back to the 120 supports the last dip, so it could be making a double bottom. From the monthly chart, you can see that it is precisely backtesting the red trend line that it had been growing with. So I think this is worth a shot. You can put this on the current watch list. But the Chinese stocks took a bigger hit today. I think there are a few factors driving it down. First is the earning, especially the tech giants like Alibaba. Revenue increase of 29%. It dropped quite a bit after the earning. I think it would make people more scared of the coming up earning report that can trigger a sell-off. Second reason is also, I think a lot of people had high expectation of the meeting between President Biden and Xi, and because it didn't give major breakthrough, that's why there's a sell-off following. And third is that technical-wise, the HSI had rebounded and reached the 20-week MA, so it acts as a resistance. Anyways, for the long term, I've said enough, but for the short term, of course, it's not gonna be a smooth ride. For the meeting, I don't think there is major breakthrough. For all the disagreement, like for Taiwan, for the trade, for sanction, etc., there's no common ground, but there is one thing that they can agree on. It's the fight for the climate change. At least that, but most of the problems still remain problems. I guess what's good is that they finally started to talk, and we are hoping that there will be more coming up, and meeting is better than no meeting at all. So that's my key takeaway. Baba had a big fall after the earning. Is it really that bad? So revenue increased 29%, profit decreased by 39%. So it's a miss of the expectation. And they have adjusted the growth rate for the year 2022 from 30% growth to 23%. So I'll say this earning is not great, but it's really not that bad. Let's compare it to JD. So Q3 for JD had increased 25% year over year compared to 29% of Alibaba. And the profit is down by 36% compared to the 39% of Alibaba. So the revenue is up less than 3% in Baba, and the profit is down less than also 3%. I would say their earning is not that much different, but you see JD had increased near 6% and Baba decreased 11%. And I think this is more sentiment and political issue driven than the actual performance. It seems like it. So it has broke through a few supports, and I think there's a good chance that it will make lower low. Next support is 132, and if it makes lower lows, it would have a second time of divergence, which I think it would be worth a short opportunity. NIO has backtested the 38 support and right now holding above the 60 MA. For more detailed technical analysis, you can refer to my last Tuesday's NIO video. Let's update a little bit on EH. I think the movement of EH is looking more and more interesting to me. Such a small range of consolidation, and today might be a false break of support if it can bounce back up within 1 to 3 days following. So moving so long within such a small range for over a month. I think this is seriously challenging our patients here. So what I do, my strategy for EH is that even though I have a big position, I'm still adding in bit by bit, and I've decided to do it on a regular basis. So instead of waiting for the big dip or the big breakout, I am going to just add on to my position regularly. So once a week, once a month, as long as it's still at the 20s, I'm still okay to add. LKCO, last week I have said that LKCO is not looking good for the short term. It's still on a downtrend, and if it makes a lower low, then it would make an MACD divergence, and it did today. I set the next buy-in price to be 0.88, and today we have reached 0.89, because why not, right? Miniso also reported earning revenue 2.6 billion RMB, 28% year over year. Among this increase, most of the growth, a good part of the growth is from the overseas market, increasing 78%. Profit rate 7%, making a new high ever since COVID. With this, the pre-market was up, and then after that it was driven down by the whole Chinese sector sell-off. It looked like it had hope to break the 120 resistance, and then coming back down, breaking a few MA. That is of course not pleasant to see, so there is a chance it can go down more to backtest this trend line, or possibility to make even a double bottom, so keep that in mind. I just want to warn you about the risk before, because every time things drop, some people would come out and claim, oh, this is another pump and dump. Now, if you have enjoyed this video, please give me a big like and write me a great comment, and I'll see you in my next video. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.